All right. Good morning, good afternoon, everybody. This is Trainee John from Simpler Trading. Hope everybody's doing well. We're going to do a quick broad market analysis. We'll be covering March 3rd, so that's tonight. And at the end of this video, we'll be talking about the futures. So that's why we say the 3rd. So again, tonight, if you're trading futures, I have blueprints ready for you going into this week. And then we'll be covering into the 8th. Let's go ahead and get started here with the market the major U.S. economic reports and Fed speakers. So let's just go down the list here really quick. Monday, tomorrow seems pretty light. You got Philadelphia Fed President Tom Harker speaking. And then on Tuesday, factory orders ISM, Fed Vice Chair for Supervision, Michael Barr. Michael Barr. So 2 times tomorrow coming in. Again, these are Eastern times, 12 and 3 o'clock. And then on Wednesday, we have ADP employment. Fed Chair Jerome Powell testifies to Congress. So big day right here. Again, 10 o'clock Eastern. This is going to be Wednesday, March the 6th. And then right after that, we have U.S. wholesale inventories job openings. San Francisco Fed President Mary Day, Federal Reserve Beige Book, Minneapolis Fed President Neil Kashkari speaks. And then on Thursday, it gets a little bit busier with initial jobless claims. Fed Chair Jerome again to testify to Congress. And then down here at 3 o'clock, consumer credit. And then finally on Friday, looking at U.S. non-farm payrolls, U.S. unemployment rate, U.S. hourly wages. All right, so earning whispers. Again, I keep feeling like the earning season is coming to an end, and then I come over here to check out earning whispers on X, and you guys can see I have quite a few green lines here, and these are green lines that I'm always interested in how these names are going to report, and these are names that I could potentially buy call and put debits into earnings depending on what the structure looks like and what the setup looks like going into earnings. Okay, so some of the names that I may be interested in are going to be Crowd. Okay, so CrowdStrike, Target, Ross. Gotta love Ross. Wife loves Ross. She likes a good deal. So I always notice that they're doing really well. Nordstrom's over here. And then on Wednesday, we have JD, Victoria's Secrets, Campbell's. And then on Thursday, we're looking at Broadcom, Costco, Marvel, Mongo, DocuSign. And again, these are just names that I'm interested in. But if you guys need to, you can go over here and follow Earning Whispers here on X, and you can find this good information out there as well. All right, moving on down. This is SPY and QQQ neutral results. Remember, guys, if you don't know how to trade the neutral strategy, just go over to my YouTube page, which you're on right now, and make sure you watch that really quick video. It really is straightforward. And while we're talking about that, don't forget to hit the like button. I really appreciate it. And I thank you so much. So this week, notice that we did get the drop below the neutral. And it's been a long time since we haven't hit one of my targets when this happens. The neutral strategy gave you some false triggers to the downside. You could have been stopped on this, but then once we got the trigger long, we did end up coming up here and hitting T1. Overall, SPY didn't do a whole lot from last week's high. It really didn't. There was a nice push to the upside, but overall, you can see when you're looking at this, it was pretty sideways for the majority of the week. And that's what I was calling for is chop until it wasn't. Now, over here on the QQQ, I did take this setup. I closed Q puts here for 50 percent, and then I bought deep in the money as a hedge for my account. And as you can see, looking at my account and hedging the account and then looking at the QQQ neutral strategy, it would have made more sense probably just to get long here as we did hit T1, T2, and T3. Now, I did add into that short, I believe, on Friday. And again, this is more in the money puts. Well, they were at the time being. They might be at the money or slightly in the money right now. And I do have time on those. And so we'll see if we get a pullback, but I'll get into my overall sentiment here a little bit later. Okay, let's go ahead and get this out of the way. I'm going to pull up now the strategy or the neutral strategy for this week. And this is what it looks like. And this is where I tell you to go ahead and pause the video or come back to this portion of the video and go ahead and put these lines on your chart. Again, really straightforward. If we go over the green, we're looking for T1, T2, and T3. Anyone that's long, what I like to teach is you bring those stops up after you hit those targets. But these are targets to the upside. They are resistance until proven otherwise. Big disclaimer here, this is not supply up here. here. We're at all-time highs, therefore there is no structure up and to the left. So what we're using is Fibonacci extensions, and most likely where I have extended my Fibonacci's are from this pivot low into this pivot high to give me these targets. And then I also anchored my Fibonacci from this pivot here to this pivot to give me some of these targets in here as well. All right, so two Fibonacci extensions giving me targets to the upside 515, 518, and 520. And then over here on the QQQ, same thing, all-time highs. We have Fibonacci extensions. You will notice that I have 4 targets over here, and that's just because I feel a little extended, and my first target was 449 and a half. But I felt like that's a little too far away after we've extended this much. So I want to be safe here, and I drew a Fibonacci extension at a lower point, I believe, using this anchor here and here, giving me this target right there. So 448.15, 449.62, 451.69, 454.44. And then to the downside, this is, again, my overall sentiment, it has not changed. And I feel like it's in line with most traders out there, is that this market is really resilient. And we're not getting the pullbacks that a lot of traders are looking for. We still have earnings going on. We have Fed Chair Powell talking this week. So there's a lot going on that could continue to push price up. I mean, prices keep coming back into the lower time frame demand zones. They're working very well. There will be a point where they don't work. And basically what will happen is, when I'm showing you these charts, is that anytime I identify these little buy zones down here, things are starting to look a little bit different if we choose to pull back here and we don't get buyers to show up here. We go underneath your 4-hour cloud, we stay underneath the cloud, then the cycle will change. So until that happens, it's still a buy the dip event. Okay. Notice here on the 4-hour, we are on a 4-hour charts for the SPY and QQQ. The cloud itself, you got your EMAs, pointing to the upside. Things are looking great. And this cloud is support until proven otherwise. It's not until we get underneath that we start to kind of, basically, if you're long minded, you start to take a little bit of caution under here. And then you want to wait until we get back above the cloud before you start to pursue those longs again. All right. So again, underneath the cloud, just be a little careful here. But as of right now, your lower time frame clouds and zones are a great place to be buying that dip. Okay. Let's go ahead and go over into our next chart, which is going to be our bigger picture. So again, I put these out on X. You guys can go over there. I won't talk a whole lot about them because really at the end of the day, it's the same thing week to week. I love to give you this week to week, but we're looking at a quarterly chart. That means every candle represents one quarter. All right. And if you look over here on TradingView, you're going to notice that we have 25 days until this quarterly candle closes. So this candle, and I've been here before, not saying it's going to happen, it looks absolutely beautiful, right? Nothing can go wrong. Matter of fact, at this point, I feel like everyone and their mom are, they're long in the market. Every strategy out there is working. I feel like one of the few who haven't made $100,000 in February, but I've done well, so I am profitable, right? But I do have some unrealized trades that are down. That I look back and I think to myself, gosh, man, I put 50 grand into Tesla. If I would have just put that 50 grand into Nvidia or into AMD, probably not SMCI. I'm just not that ballsy when it comes to that. But I think it's been a hard market. And a lot of people will tell you that it's really simple. I don't think it's that simple. I think that the technicals are there. I think buying the dip is simple, but trying to press the gas up here, it reminds me of 2021. It's very difficult. So you got to have a risk tolerance that you're able to, I guess, take the trade. And if we go to bed at night and we wake up in the morning, if something doesn't go your way, you're going to have to be able to accept that. All right. For me, my risk tolerance, I'm just having a hard time putting a lot of money behind a trade after it looks like it's really extended. And we'll look at some of those names a little bit later on different videos and I'll talk about that. But for right now, again, the quarterly candle looks beautiful, but it does look a little extended. and we keep saying to ourselves, like, can we just get a little, smaller, minor pullback into a little bit deeper support? I'm a big fan of clearance rack sells. I want a deep red day to be able to buy things out of fear when traders are mainly fearful, but I'm not seeing that. Traders aren't fearful. Matter of fact, fear and greed would tell you that they're extremely greedy right now, and that the market's just going to continue to move up here. So, because of that, it's very important that you understand on these smaller time frames, and I'll show you here, we are creating demand zones, all right, on a weekly standpoint. All right, so even though we may look extended here, there are buying opportunities in structure right underneath there. And before I move on, I have to show you, and I show you this every week, this cloud is support until proven otherwise. If we get some kind of major event in the market this year, and we get a really deep pullback, whether it's 1 day or 3 weeks or 3 months, if you get me back to this cloud, this will be a buying opportunity for me. So I just want to make sure I put that disclaimer out there. As far as notes are concerned on the SPY, you'll notice here a new high was established, but overall not significant move, just a few dollars over the last week's high. Price did create demand on the weekly, and I want to show you that really quick. I'm going to come over here and click the weekly, and there it is right there. We actually have a buy signal coming out of the cloud. This is part of my indicators here. We do have the structure. You can see it here. This is an inside and up formation. So for my supply and demand traders, you guys know what to do. If you're watching me and you have no idea what I'm talking about, I have an inside and up tutorial to teach you how to find those and what those mean, and how you can trade off of those. Okay, so again, you are creating some demand here already. So again, a pullback that could bring us into, let's say, the 504.5, 505 level could be a buying opportunity once again for this marvelous run that we're having here in the market. So again, there's your quarterly. And far as targets go, they're going to remain at 515 by 523. You can see that we missed that target just by a little bit. We closed out at 512.85. And again, these are just Fibonacci extensions, and your quarterly support is going to be 487 by 472. Again, this is from a quarterly perspective. That weekly that I showed you has nothing to do with that. This is for my traders who are long term. They don't really care about the smaller pullbacks, but need to understand where they are. This chart's for you. Let's go ahead and go into the Qs and talk about that really quick. This is a beautiful chart as well. And we talked about this every week. And, today's notes, very, very simple. New highs and a weekly buy signal. So on a weekly, again, we're getting a buy signal. The targets right now are 447 by 458. You guys can see we got very close to that last week. And all I'm doing is using the Fibonacci extensions up here. All right. And let's go ahead. Same thing on the quarterly cloud. No reason. I'm going to keep telling you this every week, guys, because I've been trading for a very long time, and there will come a time where we do get a big pullback, whether it's this year or next year. But I just want you to be aware of where most fear comes into the market. But look, every time we've come into this cloud, it's been a great buying opportunity. We don't want to miss it. So I'm going to keep reminding you. So sorry if I'm being repetitive, but I just want to make sure you guys have that on your charts and you understand where it's at, okay? Far as notes are concerned, again, your support 439 by 421, and again, targets 447 to 458. Let's go ahead and move on into our next. What I feel is very important is going to be the dollar. All right, and I set this out as well. We're looking at this from a weekly perspective, not a quarterly. It's working out great. I'd love to go over this just to show you the proof of concept. Um, you know, Last year we found the supply zone. Once the dollar hit supply, we expected the market to rip. I was in Orlando for our conference down there for the money show for Simpler. And we talked about buying the dip in October. I will tell you there was a lot of fear there, but if you just kind of take these charts that I'm sharing with you and you look at the value of supply and demand and you start to understand, then you understand that, hey, this is hitting supply. We expect it to break down. Where's our demand? We find that right before price gets there. We identify that demand zone. We understand where the supply zone is. So this entire time that the dollar was falling into demand, the market was rallying. And then the market's still rallying because resistance is right here. Then we poke over and we get a couple days here and there that are pulling back. Now, the big thing about this is what I'm doing is, and again, you probably heard this last week, but I'm going to keep teaching you, is I am anchoring my Fibonacci's in this range. This right here is the golden Fibonacci, which is the 618 at 104.619. You don't have to be that picky. It doesn't have to be like 619, but anything over this yellow line is where I would throw a little bit of caution out there in the market. And anytime that price is basically stuck between the 50 and 618, our Fibonacci says that you can expect choppy. So you notice that the dollar came up, it smacked the golden Fibonacci twice. That means that this downtrend, right? This downtrend is still intact. All right. It's not until price builds over the golden Fibonacci that that downtrend is broken. Now, why is that important? Because if the dollar breaks that downtrend that it started back in October and then starts to uptrend, then guess what? I believe that the cycle in the market will then start to pull back. So everything is really been working very well from a chart perspective. Again, I just think that the market's been a little bit more difficult than what you see out there on FinTwit and so forth. I don't think everybody's having the easiest time in the market. I think the market's difficult. Okay. And we are teetering right here where it's very, very important. Now, read the notes here. Basically, what I'm saying again is if we get over this level, be cautious. If we start to break back down below the cloud, guess what, man? Market continues to rip to the upside. Matter of fact, if we start to go under 102 again, you're just going to see this mighty market continue to push to the upside, and you're going to continue to see that fear and greed rise into that extreme greed. Again, we're only at 77 this week. I mean, there is a such thing that we can get closer to 100. All right, so just know that. All right, so the next thing I want to look at is the TNX or the 10-year. So I'm going to take a look at that. TNX, this is really important. I've been saying the same thing since the beginning of the year. We found a supply zone, we found a demand zone, and I said expect the TNX or the 10-year treasury to move between these during your first quarter. I got 25 days to be right. We've been right so far. And again, this has been no worries. I mean, seriously, because you understand when the market starts to worry, it was just pushing right into a supply zone and then starts to pull back. Market continues to push to the upside. That's how this works. Again, more fear if we get over this. Less fear, the more we go sideways and get back down here. All right. And that's what we're looking at in the 10-year treasury. Let's move on down into the skew. Again, guys, this is very important to me. I love to use the skew. The skew is coming in this week at 150.42. If you do not know what the skew is, please check that out on Google. But you can also go over to I think I showed you guys last week. If you go over to YouTube and you put in John Carter, Las Vegas, and put skew, watch that video. It's absolutely amazing. I love it. You'll learn how to incorporate that with your analysis going into each week, and it really, really can help. Now, I've mastered and been able to find the right levels for this year, and they've been working amazing. And that is this lower level down here. I understand that it says protect risk off, but for 2000, late 23 into 24, anytime it comes down to this level, is right where we're really teetering on the market cycling back to the downside, but it's been a buying opportunity. So even though it says protect risk off, I don't want to change that. This is actually risk on for 2024 until it's not. So again, until the skew starts to close underneath this level, on a weekly basis, right? 2-week basis, because we see that it's closed a couple times under here, but there's not really been any consecutive closes underneath here. So again, every time it comes down here, we're looking for the market to go bid again, dollar to kind of come in, and then we kind of hit these extreme levels to the upside. And I want to point out, it says extreme buy puts 30 to 90 days out. This was the case for a very long time, and we're seeing that you don't necessarily need to buy 30 to 90 days because the pullbacks so far have been very shallow, and yet the duration is only like a couple days, right? So there's no reason really at this point I hate saying this because I feel like I'm going to keep saying this, and one week it's going to happen, and then you're going to go, oh, well, you said the opposite. So I want to stick to what I've always taught, and that is, buying too much time here. You can't go wrong, but I feel like your premium cost just doesn't make any sense because it's not taking 30 to 90 days. It's only lasting a couple days. So if I'm paying $9 for a put, I could have just went out and bought 5 days out, paid $3 or $4 and just did a lot better. That's how I see it. But for right now, big thing about this is you're looking at buying the market risk on when we come to these lower red level until it doesn't work anymore. In the event, and again, I'm telling you guys things just in case, in the event that we start to sell off in the market and fear actually comes in and we start to close, say 2 weeks under here, and then we're down here, I promise you, you'll be looking for help. You'll be saying to yourself, "Hey, my strategies aren't working anymore." For a lot of traders, they're doing really well in a bull market, but when things start to get ugly, that's really going to show you whether or not the strategy that you're using can work in all market conditions. So when this does happen, and when it does, I want you to remember these levels. This is where I'll be buying long-term calls and looking to get, really heavy on the call side. But again, we have not seen these levels since December and October. October 2022, you know, December 2022. So just over a year ago. It's been a long time, guys. And if you go back and study this thing, it's not like, these levels don't work. They've always worked. They really have. Timing is the variable. You want to get long down here in the market, and you want to be looking at getting short in the market here. But again, 2024, a lot like 2021, has kind of trapped you in a box where it feels extreme, right, to the upside, and it stays there. But then there's a lot of things out there saying, hey, just be careful. So again, that's why I personally find it difficult because there's a lot of signs saying, hey, man, the majority of the participants in the market are actually sitting over here on the greedy side, right? Extreme greed. That means, you can't go wrong. You just buy the dip, buy the dip. Participants are primarily on the call side, right? And when participants are primarily on the long side, then you're looking for the market to pull back, right? But that saying that since I don't know, it's been months, right? October was warranted. You know what I mean? We came into a demand zone, the dollar pushed into a supply zone. So these things were all warranted. But, it's felt really, really frothy. And like I said a little bit earlier, now we're only at 77. I find it interesting it was at 78 last week and it ticked back a point. And I'm like, oh, even after a big rally? Something just doesn't feel right about it, but it's not a big deal. We're just talking about 1 point from here. Okay. So again, you guys are extremely greedy. All right. I love you, but the majority of the market is extremely greedy. All right. Next thing we're going to be looking at are the ES futures. Let's go over here to the weekly. This is our chart going into this week, really straightforward. I just want to point out a couple things that I think are important. Again, if we get some kind of minor pullback here, we have an inside and up formation. I went ahead and identified that for you. I'm sure you guys can find that as well. That is going to be our short-term support of 50.66, plus or minus 5 points there. The green zone is pretty wide. It comes all the way down into or around 49.30. So it's this complete zone in here that you could find buyers. The next arrow, I'm saying, buy the EMA if given a chance for a bounce. So again, anytime we've come back to the 9 EMA here, it's been an opportunity, the closer we get to it, has been an opportunity to buy. Okay, so again, just looking for cloud support. If we do come back there, I like the confluence that you have the 9 EMA within the buy zone as well. And then right here it says me also possible. So this stands for monthly edge. So we have a monthly edge right here, which is a trendy edge, which identifies demand as well. So a lot of confluence basically right in this area if we get a short-term pullback. All right. And then going into tonight, sorry. So let's go to the daily first. This is going to be your triggers. And again, if anyone's looking at these work really, really well. However, there's a conservative approach and an aggressive approach, and you can learn about those here at Simpler Trading. But these are your levels for this week. Resistance, 51.42. Short trigger, 51.76. Buy triggers, 51.02, 50.56. Okay. Moving on over here, I think this is really important to show you. I give you a couple charts inside the simpler room so that you can see the value of these levels. All of these levels, just for anyone that might be new out there watching me for the first time, all these levels were found before price came in here. And the way we find them is also explained on my YouTube channel, and I go more in depth here at Simpler Trading. But you just look left, right? So we find the zones, you find them over here. We have buy signals. Price comes back into that zone. This is where we look to go long. Price comes back into that zone. Same thing. You can see we have a couple other signals that kind of help us out to know to go long or short. And then we had this one for last week. It came right into it. Can't make this stuff up. Came right into it, then pushed up. And then far as this week is concerned on the 4-hour, and again, you might be asking yourself, hey, John, especially if you're new, like, why do you have different time frames? These are my favorite time frames. And for me, I found that not every trader cares about a quarterly chart, even though you should. They want smaller time frames. And so that's why I'm making sure that I hit each time frame to really help traders out. Okay. So going into this week, our new support, and the reason why it's gray is because we have not come into this area yet as of right now. And I won't turn this green until it works. So right now it's just support. And this is not red because this is not a supply zone. This is just resistance for right now. Okay, so this is going to be gray as well. It's not big enough for a sell-off to become supply yet. So it just kind of looks like this for right now, but this is your blueprint. All right. Going into tonight, this is really important. Again, if you want to pause this and check it out, I know for traders in the room, you already have this, but these are your zones. All right. And so this is a buy zone down here. This is where I look to go long in the futures. And up here, it is gray because once again, we do not have structure over here saying that this is a supply zone. These are all Fibonacci extensions. You can also learn about those here in the room, or you can watch one of my videos out here on YouTube. All right, so again, these are our levels. Within the zones, I basically have used, if you guys come over here on this tool, this is really neat. So we'll just come up here, edit properties. This is right here, quadrant lines. And basically, I'm just breaking down a zone and making them quarters. So 25, 50, and 75, and the same thing down here. So these are targets within a zone. So for example, just really fast, if we were to break down and we come in here and like, man, there's no buyers, right? Just say that the drop is a lot more aggressive than you thought, then you have a level to reference where we might be finding buyers, okay? So again, just to give you targets within the zone is what we're looking at here. And this is for tonight. And this, just like last week, our levels work really, really well. We're going to use these levels until they do not work, all right? So every morning, I'm going to change the liquidity chop and change around some of the targets that might be, between the zones, but the zones remain here until we break above or below them. And I do this for the ES, the Dow, the RTY, all right, and the Nasdaq. All right, let's go into the Nasdaq really quick. We're going to come over here to the weekly, just kind of give you a look. Now, this is a double inside and up. We talked about that last week. We did go inside and up. We got a buy signal pointing at the 9 EMA. We got our support 18,069 by 17,624. And then again, the buy signal coming in as well. Now, the buy signal is just telling me if we could take out the high, we have about a 95% probability that we will make all-time highs again. And extension targets up here, 18,593, 828, and 9109. Let's go over here into the daily. All right, now you did hit your short trigger on Friday. You pull back from that. What I did was replace the short trigger with resistance, and then I placed the short trigger up here at 18,593. Trigger longs, 18,121 by 17,769. Let's go ahead and move on into the 4-hour. This is going to be your support going into this week on a 4-hour, and this is going to be your resistance, just like on our ES chart, until proven otherwise. If you need targets above this, don't forget, that's where you come over here and look at these, okay? All right, so for tonight, this is your blueprint. This is what it's looking like on the NAS. Notice that, my target's, really far away here. We could obviously turn right up here into these extension targets and pull to the downside. But what I'm trying to do is give you two major zones that can work for the entire week. And then when we come in the mornings, I may have smaller zones that are closer, right? I won't change these major zones until this officially turns into supply or we officially break and close below the green zones. Okay. So same thing. Let's keep the zones. We'll change the liquidity chop and the targets between when we need to do that, which is typically every morning. Okay. So that's all I have for today. There's a couple things I want to remind everybody. So we're going to bring down the room really fast. So if you're brand new, welcome. Thank you so much for checking us out. If you're here on a trial, don't forget to ask questions and all that good stuff. We have the welcome tab, so make sure you kind of come through here and check out the welcome. You're going to see that John Carter has his webinar. He had one last week, and I got a lot of questions. If you guys didn't watch this, I mean, he comes out, he does his webinar, and then has a bang of a trade where he's in for 75 cents on SPX calls and ends up finally selling the last bit of those for $8 and some change. You got to find out what's working for him. He's grown this count that he's alerting in here at Simpler Trading. I think he was up last time he showed on the webinar like $89,000 already, and that's pretty impressive. You know what I mean? Already in through February, and I think he had it at like 95,000, and he took a couple small losses. And anyways, just really really awesome stuff. If you go over to YouTube and follow Simpler Trading, you'll see all our webinars and stuff like that are tracked there. You can watch his last webinar, and I believe he has one coming up this week as well. All right. The next thing, your BMA. So everything that I just went over with the charts are going to be right here. So please come over here and make sure that you annotate everything you need. All right. And then we have the educational videos. Those are right here. So for most people, when you ask questions, just come over here and make sure that you're checking under here. Most likely your question is going to be answered in one of these videos. 2024 outlook, man. This is really impressive, guys. I say this with a lot of confidence. I tell you, I do these every year. And then, we're pretty, I say I'm really dialed in to charts, and my projections work very, very well by using supply and demand and some of the Fibonacci that I teach you. These things have been absolutely on fire. All right. So a lot of these have, gotten very close to our projections. I'll kind of show you that here in a minute. Like Bitcoin, we hit our target already. You guys can see that over here. PayPal hasn't done anything. CELH, yes, right? We hit our 2024 projections. So congratulations. I know Melissa took her equity trade off, and she did really well right up in here. So congratulations to Mel. I'm still in this trade. This has been not a dud. It's flat. So it's been flat for 2 months. But I'm looking, for a move there. SMH, I would have to think. I haven't looked. Let's just do this really quick. Let's look at SMH. So if you come over here, I want to show you guys. If I come over here, you'll see this is my 2024 projection. This is where we are on the 2024 projection. So for the Nasdaq, this is what I gave everybody back in December. So we hit our possible bigger rejection area. So this is something that you want to take note of. All right. And if we come over here in the ES futures, all right, let's take a look on ES futures. Same thing, possible turn back to the upper yearly edge. So I was calling for 200 to 400 points. Once we get here, there's a possibility of 200 to 400 points to the downside, somewhere in here. It doesn't mean it has to happen. Now, what I have been seeing is a lot of my 2024 projections are being hit already in some names, which I keep asking myself, well, what does that like mean for the rest of the year? Right. So hopefully just a pullback, kind of a flag, and then we bust through them. There's nothing wrong with beating my expectations for 24, but we still have a long ways to go is what I'm trying to say. So I'm looking at 53.89 by 57.61, and it doesn't mean we have to turn here. We could come all the way up here to 2024 projection and then pull back. Let me go ahead and show you Bitcoin really quick. All right. And if you guys want to know how I made these charts, it's actually on my YouTube page. I think it's called like 2024 projections. But this, I mean, I can't make this stuff up, guys. Again, I put this out a long time ago, and then I teach through this every week to kind of keep you on track to get to your target. So we pushed through, we broke through the 618. Once we broke the 618, I said we had an 85% probability of hitting the target, and that's because we had an 88.7% target up here for 2024. And the way that you want to look at Bitcoin now is that I would expect, some volatility in this zone. Obviously, bulls would like to just see this kind of flag. Maybe we pull back a little bit, come up here, do something like this, and then towards the end of the year, get some kind of break like this towards my 69,000 or above that. Doesn't really matter to me. But what I will tell you with Bitcoin is just take the move of this quarter, anchor your Fibonacci's from here to the high once the quarter closes, okay? You could do it now since we have a high in. Find the 23.6 and 38.2, and as long as we hold that, the trend stays extremely bullish there on Bitcoin. All right. Now, originally, I wanted to check out SMH because I wasn't too sure. Yeah, you guys can see there, we just absolutely crushed through my target, um, which is fine. Absolutely awesome. And of course, why wouldn't we? When you take a look at NVIDIA, SMCI, AMD, this was my target for 2024 for NVIDIA. Same thing, guys. Just absolutely crushed it. We hit our we hit our target, and then we're calling for 800. I believe John had some 800. I think he had debit spreads maybe. But you guys can see this thing closed out at 822 on Friday. Absolutely insane to the upside. We're going to have to find some new targets. Again, I'm going to measure this stuff. We're going to redo the charts. But, if you got in here in January and you pushed up here towards 800, you did really, really well just following the blueprint itself. Now, I'll tell you, I'm banging my head. Again, I don't like to just talk about the good stuff because I think that traders need to understand how difficult trading really is. It's hard for me, right? It's hard for me to think that um, I stuck my money in Tesla, and not all of my money, but I stuck some money in Tesla just to watch it fluctuate between $3,000 gain to $1,000 to negative 2,000 over the last I don't know, month, when I could have just sat here, right? And I know woulda, shoulda, coulda, but if I go back here and look at it from a weekly standpoint and go, okay, what if I just would have, got into this trade when I got into Tesla, just based off of my levels, because I called for the 696 to 650 to get long. If I would have put my 50 grand here and rode this up to 800 towards my next target at 842 and 863, I'd be really, really happy this year. Instead, I put my money and I kind of, I'm like a underdog. I love plays like this. We bought in the demand zone. Now I have sold a lot of calls around it. There's been some great trades around it. Don't get me wrong, but when I come up here and look at the active trader, like I'm up $1,900, and that's not that's nothing to be overly excited about when you have. I think this is more like I took 25 shares off, so I think this is more like a $44,000 trade, somewhere in there. But it's really hard to see. But at the same time, I was bottom fishing down here in a demand zone, and we are hitting this cloud. We did hit our short term target, so everything's worked out. It's just not exciting, you know. And speaking of, the question is, will AMD continue its run? And I'm going to do a video on this tonight, guys, and stick it out here on YouTube and on X. So be looking forward to that and some other high flyers. And I hope you like this. Please give me a like and share anything that you might want to hear about in the future or any kind of content that you would like me to make. I really appreciate your feedback and thank you so much for your support, everyone. I hope you have a wonderful week and I hope you do really, really well. And I hope you find that next big trade. You guys have a great day.